Hi, this is Christine Thompson with Wilson Associates right here in downtown Greenville. We're actually in a downtown building and I'm doing an open house, and I thought, you know what, while we're doing the open house, I've got Trey Bonnet with me, Bonnet, and let's do a little video and learn a little bit about lending so you can find out about different packages and what are your options to be able to purchase a property. But Trey, before we get into stuff, could you give your contact information so they know how to get in touch with you?
Yeah.
Thank you.
My phone number is 704-502-7519. That is the easiest way to get in touch with me. It's my direct line. So you can also email me at trey.bonnet@ccm.com. Spelled out is trey.bonnette@ccm.
Thank you for spelling that, because people could get that wrong. Christine Thompson, just look at the number on the screen or scan my QR code. That's how you can get in touch with me. But let's get into some fun stuff. So Trey, we got a lot of things going on in the lending market right now. You know, rates, that's always the big conversation right now. And, you know, we still have buyers that are thinking, well, I want to wait for the rate to go down. What's your first thought on that when you hear somebody thinking the rates are going to go down? I want to wait because it's going to make the home more affordable.
I think that they should go ahead and get in the house. It is.
Why?
The simplest answer is if when rates do drop, I think that they are going to turn in like basically COVID was, where everybody's going to rush to get a house. However, you can always refinance the house. So go ahead and get in
without competition.
Mm-hmm. Yeah, and so I would go ahead and get your seller pay concessions right now too, because once the rates do drop, I do think those are going to go away.
Yeah.
For me, I would say go ahead and get in it too, though, is the appreciation rate on a house is not going to go down. Mm-hmm. That will likely go higher than the rates coming down will be. So.
What are you seeing, difference in interest rate versus appreciation that you're seeing in the market?
Well,
and we're in the Greenville greater area, just for context.
Greenville area, I think that you're going to see a greater appreciation value than some other spots in the country. Mm-hmm. To me, that's why I think that you should get in the house as soon as you find it. There's no waiting at all. With that being said, I think Greenville is going to be at 7 and 9% on appreciation.
Mm-hmm. Year over year?
Mm-hmm.
Yeah.
And rates might go to 5. So the latter is more important for the value of the home and how you want to build your wealth than anything else. And if you're trying to make the rates go down for affordability, again, you can always get in now and just refinance later, because I feel like that if you wait, you're going to miss out, and then you're going to get in line.
And the home price will just be higher, mm-hmm. right? As we say, marry the house, date the rate, right?
Yep.
What do you think the chances are, seeing 5%?
I think it'll happen within the next 6 months.
Really? Mm-hmm. And why?
The rates are going to be dependent on, to me, about 4 different things. That's going to be inflation, that's going to be economy, and how those improve. Inflation's a big one. If more of that comes down, then our rates will come down.
Right. They kind of go together. Mm-hmm. Yep. Mm-hmm.
The simplest terms is look at gas. Gas comes down, rates are coming down. Gas goes up, rates are going up.
Right, yeah. And we can all remember that from the last year or so, mm-hmm. with inflation was going up, 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 and then rates were going up, up, up. So, mm-hmm. of course, that makes sense. I appreciate that. All right. So what about, if somebody says, well, I want to have 20% down so that way I can keep my monthly lower. And it takes them 6-9 months to get that 20% down. Should they be waiting to get that 20% down saved up, or say, do the 5% now while the home prices are lower? What are you seeing?
I would say do the 5%, get in the home as fast as possible. And if you do want to go put that much money down in the future, you can call your lender and they can do a recast for you.
Okay. Can you explain recast? That's different than a refinance?
Mm-hmm. So recast is where if you have a lump sum of money, you can call your lender up and they will, and you ask for a recast, it's going to cost about $150, $200, but they will go in there and readjust your interest and your principal to the amount of money that you're bringing to lower your payment.
Wow. That's huge.
Yeah. Mm-hmm. And it doesn't cost anything but that, whereas a refinance, you'll have to go get your escrows done do all that good stuff.
Yeah,
so.
right. Get the appraisal done again on the house. There's more fees involved with that too, right? So recast. Can you do that with any loan or?
You can do it on any loan but a VA.
Okay, so if you get an FHA 5% down or even 3.5% down, what about if a loan has PMI in it?
So PMI, you usually have to wait 2 years, or you can make an update to your house and prove that, and your lender, if it comes back with more equity, they will take the PMI off.
What if the market's going up and you're like, hey, this market went up like 10% this year, and you said it's 3 years with the PMI or 2 years?
Usually 2.
2. So let's say sooner than 2, they notice, wow, we got a good property here. It's really gone up. Let's say they bought it in a up and coming neighborhood and it's really turning around, and they notice in a year we really got a lot more equity in the property. Could they recast?
They could recast. They could show that they've done improvements on the property.
Do they have to show improvements though? What if it's just like, hey, just the market has gone up. We're in this neighborhood.
Typically,
it's doing
yeah,
well.
you will have to show some type of improvement.
Can you define improvement?
Countertops, flooring, things like that, so that they know that you've actually committed to putting something behind the house, because most people just try to get out of PMI.
So it's not, oh, we painted the walls.
Yeah.
It's got to be an actual more tangible
a little more
product.
renovations,
Yeah. What if they're like, hey, we got all new appliances?
No.
What if they're upgraded? I'm just trying here. What if it's upgraded appliances? Like we got top end appliances instead of it was just basic appliances. Or if they got a nicer furnace or a nicer AC system.
Probably
Is that
not.
an improvement?
You would have to look at maybe adding a deck or something like that.
So just a roof replacement, window replacement.
No, you could qualify. You could, if you did something like that on the purchase of the house, you could probably qualify for some type of energy benefit.
Yeah, but that's not recasting and stuff. Okay, well, that's why I have to ask. I don't want people to think you can do it no matter what.
And then, when you set up mortgage insurance, you can set it up numerous ways. You just got to talk to your lender about it. Do you want to buy it down? Do you want to not buy it down, but you want to split it so that it's cheaper for you, things like that.
Okay.
There's just ways around it. And then you can ask about, I don't know, if you don't want it at all, do lender paid mortgage insurance, or you can do something whereas borrower paid, where you just pay for it up front so you don't have it.
The PMI? Okay. So let's say someone was buying something for $500,000 and they were doing 5% down and there's PMI involved. How much? I'm not looking for exact numbers, but I mean, are we talking like, how much are we talking about to just pay that up front?
It would be 1 to 2% of the loan amount, which would be, if you're buying it for 500,000, it would cost you max probably 10,000 to buy it out. So it's just doing the math.
Okay.
Or
so that's not crazy. Ask the seller to pay it.
Yeah. Or you could do a lender paid, which is what we do is the lender pays it. The rate is usually a little higher than what it would be.
All right. And then you just don't have the PMI.
Yeah.
Right. But we are right now in the market in a position where sellers are becoming a lot more amenable. And you could go to the seller and say, we want you to pay that amount as a credit to help pay the PMI up front. And then you don't have it and you're still doing your 5% down, right?
Correct, yeah.
So, keep that in mind. That is a way to make it, if you're like, hey, I'd love to not have the PMA, but I can only do 5%, but I don't have that other extra 10K or so to pay off the PMI up front, negotiate into the contract with the seller, right?
And that's 100%. We actually have a program that allows you to buy your PMI out.
Nice.
It's just sitting down and talking and asking the right questions, and your loan officer being able to realize what you're trying to do, which would be me.
Yeah.
So
that's right.
Yeah. So, there's ways around all this stuff, and we can build or we can figure out your payment so that it be the less amount as possible. So like I said, it would be buy now, refinance later, recast.
Okay.
We can get your payment down. You just have to talk to us.
Have to have that conversation, pick his brain instead of just assuming, no, can't do it. There's a lot of creative ideas out there. This is why I work with Trey. Trey, talking about creative idea, we're doing an open house in a property where it's not warrantable right now because there are more rentals than condos. They're getting converted to condos, but until it gets to that correct ratio, the property is non-warrantable. But you have a solution for that.
Yep. So what that means is non-warrantable means there's a couple factors in there that will not allow Fannie and Freddie to purchase the mortgage. So we have different avenues. One of them would be your non-qualifying mortgages. It would be where we would use your bank statements, your 1099s, things like that to get you into the condo. It does come with a higher interest down payment. However, at the end of the day, once they become warrantable, you can put 5% down then, but most people in condos go ahead and put the 10% down or however they need to.
Right. Well, and if you're saying it requires a little bit more down, again, try to negotiate it with the seller, right?
And at 20% down, you're not going to have PMI.
There you go. Perfect. I love it.
Yeah.
Now, what about, I work with clients, I work downtown Greenville, and I may have clients that say, hey, I want to get into a neighborhood where it's an up and coming, it's still walkable to downtown, but get it at a much more affordable price. And then they say, I'm going to want to just tear the house down because it's really old and build a new house. How would you structure a loan for that? If they said, we know we can afford it, but we just don't have the cash to pay for a new house to be built.
So there's a couple options on that as well. You can do what's called a 203K. I have done this personally.
For a new build?
No,
or for a rehab?
For a rehab.
That's a rehab.
With the FHA, you can take it down to the studs or the foundation and go from there.
Okay.
It's practically like a brand new house.
Yeah, I've had builders do that where they keep the studs or enough of the studs so the city still considers it an existing property and not a new construction. And it keeps the taxes down too.
It does.
Yeah.
That's one way to do it. The other way is if you were to do that, we do have a construction loan. You would have to factor in the demolishing of the house. Though.
Sure, of course. Yeah, you have to pay for that.
And those start at 5% down conventional side for a new build.
Okay.
They're easy.
And is that on the projected cost? Like, hey, we're going to be doing a 2-story, a detached garage. We're going to do this wonderful patio scape, hardscape, and all of that. Do all the plans have to be written up, architect plans, everything with a proposal on this is what we're going to be building? So you know what kind of loan this amount's going to be.
Yeah, we'll have to have the build cost sheet, and we will walk all through that with the numbers, with what maybe type of interest payments are going to be associated with that, what type of management fees are in that, things like that, because we do manage that process for the borrower. And you get 12 months to build.
Awesome. That's great. I love it. And so, so there's 2 parts to the loan. When they close on the land, the old house that they're going to tear down, and then there's a second loan that they close out after the house is completed. Are there phases to that second, the construction loan? It's like that they got to show, hey, I got this done, that done. We're at this phase of the loan. So it's not a 10-year project.
Yeah, every time that they request a draw, we have to go out there, take the pictures, make sure everything's being done correctly. The inspectors will go out there. Everybody will kind of write off on it, and then the checks will be issued. And then there's some checks and balances in there too.
Right. And are checks like just issued directly to contractors and stuff like that, or it just goes to the borrower?
It goes to the contractor, but both people have to sign to make sure that the things are being done.
Yeah. Okay. Now, what if the buyer says, hey, I know how to build a house. No. I'm going to build it myself.
Can't do it. You've got to have licensed contractors to do the build.
Yeah.
Just because if something happens, then we know who to speak to.
Yeah, but they can pick their builder as long as it's a licensed builder. They have insurance and all of that good stuff, right?
They get to pick the builder, and then we will vet the builder out. It takes about 72 hours to usually do that.
Okay, that's not bad.
But yeah, then once the builder's figured out,
that's fantastic. So, and we can build this all into the contract when you're offering to buy that piece of land, and maybe it's not land, but a tear down on it. it's important to let that seller know what kind of financing you're going to be doing and you plan on building a house on there, right?
Yeah, and so when that happens, of course, there's always a construction rate, and that is going to be for us, it's our wholesale line. It is a little higher than a normal rate. Now, when the house is completed, then you will drop down to whatever market rate is available.
Okay, so it's very short term, you're carrying this higher rate.
Yeah, the reason that the rate is a little higher is because it is a short-term rate, number one, but we do the financing on that, so it's our money. So
Cool.
there is just a little bit of higher rate compared to a normal 30-year mortgage.
Awesome. Let's just talk a little bit about just the simple overall process of a loan. When somebody's getting a loan, they're going to come to me, I'm going to line them up with you, you're going to sit down with them and figure out what kind of purchase they want to do. You figure out the package. What are steps after that? I get them under contract now, based on knowing the type of lending you're going to do. What can they expect from time of contract to close that property? What are you guys doing, behind the scenes? What does the buyer need to be doing?
We try to keep the buyer really involved. We do try to get everything up front. So you will speak with me, you'll speak with my assistants, and we try to get all the documentation right there.
Before I write a contract.
Yes, but we also want to get all of it so that we don't have to keep going back to the client, because that's where a lot of the, it's not aggravation is for a buyer, because you have to continuously go back to them. So we try to do everything up front.
Well, the other problem too is if they're under contract and you have to keep going back asking for other stuff, now you're losing time on getting this loan done, and you really don't want to risk going to the seller saying, we need an extension, because that's going to make the seller nervous.
Yep,
right?
it does.
And even though there are no issues, they just don't like to hear that.
Yeah, the faster the documentation gets to us, the faster the loan will close.
Yeah, so be super, super thorough even before you go out looking for a home to make sure you have as much documentation, right?
Yep.
Now, can you do, we all have different terms, but can you do a conditional approval even before a buyer goes out to look for a home, so you can do the underwriting, which is part of the process, and close that loan faster?
Yeah, we can do an upfront underwrite. It's known as TBD, to be determined. But yeah, we would get your documentation upfront, go ahead and get you in front of an underwriter.
Okay.
Process takes about 3 days.
That's nothing.
But then you're ready to go when we have the documentation. If it does take too long, then we would have to re-up the documentation as far as income docs and bank statements.
Right. Now, when you're saying TBD, what are the things that are left to be determined? Because obviously, you don't have a contract on a house, right?
Yeah, what's left is title work and appraising.
Okay, so title work on the house. Well, you need the contract too, right?
Yep, and title work usually takes about 2 weeks. Appraisal is 5 to 7 business days.
Which can be happening at the same time, right? So you could close someone like in 2 weeks. So that's really, really fast. So if you're not a cash buyer and you're trying to buy properties that you're competing with cash buyers, because cash buyers can close fast, this will kind of put you on even grounds.
Yeah, it literally puts you on the same ground as a cash buyer, because the thing with the cash buyers, they still have to wait for title work to get done too.
Right, exactly. Yeah, so that's a great strategy that I always recommend to my clients, and Trey can do that for you.
I can do that.
Anything else that you want to share that you feel is important for our viewer to know and understand when they're making decisions to pursue getting a loan?
The biggest thing is just asking, as a loan officer, the right questions to the client so that they know what their numbers are, because that's always the biggest problem, is people can't figure out what they are looking for. So
like what their budget is?
Yeah, and that's my first question to a buyer is, what is your comfortable payment level? Because that way I can narrow down what they can do, because the misconception is, oh, I want a $300,000 house, but they don't realize the payment, and then we're going back to square one.
Right.
So we need to figure out where their budget is.
Yeah, and I found sometimes people have a lower budget than they didn't realize they could get their monthly down to a certain number. Again, like strategy, negotiate with the seller, closing costs, credits, all that stuff. And some, they can be pleasantly surprised. Oh, I didn't know I could get a house at that price range.
Yeah. And they're, it's all talking to not only your agent, but the lender on that.
Big time.
Big time. Because, sometimes the lenders can come in and say, hey, I can do this. You may be able to take a little higher rate, but I probably can give you a refund on some of this
Yeah.
too.
And then we coordinate to say, Christine, when you're writing an offer, work in that closing credit. So that way they're going to be able to keep their monthly payment down to that, which means now they can afford this price on a home.
Correct.
Right? So don't get so pigeonholed thinking there's only one way to do a loan, how to structure it. And there's a lot of loan packages out there too. So you might have a unique situation. If you're a veteran, you can get a VA loan, 0% down. There's stuff out there.
There's numerous ones. And then, we all have the same base programs, which would be your conventional VA, USDA, but there's offshoots on each one of those.
Yeah.
So we can definitely kind of get in there and play around and figure out which one's going to work best for the client as far as the money goes.
Yeah. So you're probably feeling overwhelmed by, oh my God, there's so many different things going on with lending. This is why you call Trey, and he's going to just simplify everything and help you zone in like a radar, like a beam, and figure out, oh, that's the kind of lending we should be doing. And then you know what your budget is, you're keeping your monthly comfortable, you can sleep at night and find the home that's going to work for you, right?
Yep.
Yeah. We're here to just take the scare out of it and the complications and just simplify it for you. Because going online and just going into websites and figuring out your mortgage and this and that, it's so off, right? Mm-hmm. It's so off. And would you agree with me to say, beware of these online sites that say, oh, you can get your rate at this, and then they start putting in their information, then the hard pull's done on their credit, and now the rate's higher?
Yeah, that tends to happen, yeah.
Yeah, so just please don't have your credit pulled online. Call Trey. It's all under a controlled circumstance, and you're not going to have bad surprises. You only want good surprises, right?
All
yeah,
the time.
Perfect. All right, Trey, I'm sure our viewer has a lot of questions. So if they jumped into this video towards the tail end or something, what's the best way our viewer can get in touch with you?
Use my direct number. It's 704-502-7519. It is Charlotte. I am based here, though. So
awesome. Well, cross country, yeah. You guys cover a lot of territory because I'm licensed in Illinois also, and I'm very familiar with cross country, having worked in the Illinois market as well as the Greenville, South Carolina market. So FYI, if you live in Illinois and you're defecting and going to South Carolina, I'm your girl. I'll help you out. I can help you find a house and sell your house in Illinois as well. Right?
That is a true story.
It is true. I've lived it and did it myself. So you got all my information on the screen. Feel free to get in touch with me. You can text or call me. Go to my YouTube channel if you're not in it right now and subscribe to it. It's Christine Thompson Homes. FYI, if you're watching this before the middle of December, I am doing a $100 Amazon gift card drawing.
Nice.
You can enter too. Okay. So if you have to subscribe to my channel to enter, I will put you in the drawing. And for every person that you refer to my YouTube channel and they subscribe, you'll get another entry per person.
Sounds like a deal.
Right? $100 gift card. You can use that during the holidays, right? Mm-hmm. Either for yourself or give it away. So be sure to do that. And if you have any ideas about lending or other topics that you want me to cover, if it's lending, I'll bring Trey back again. And I'd be happy to do another show to cover a topic that's really important to you if I have not covered it already. Just drop me a message in my YouTube channel or DM me on any of my social media pages. Thank you so much for watching. I hope you are having a fabulous day, and I hope this information was helpful to you. Thank you, Trey, for your time.
Thanks for having me. I appreciate it.
All right, take care. Bye-bye.
Follow us for more updates.